You and your firm are leading practitioners in the M&A space. So I just want to ask you, going forward, are you optimistic or pessimistic about the landscape of this business?
I'm optimistic. I think there'll be, deal flow will increase in 2014. I think we've come from an environment over the last number of years, 3 or 4 years ago, where the price people were willing to sell and the price at which people were willing to buy, there was a huge gap. And when there's huge gaps between willing buyers and willing sellers, deals don't get done. Yeah. I think at this point in time, the values are starting to come together. There's lots of liquidity. I think there's optimism. I think what has kept things, I think, still slow is the whole involvement of sort of the Washington regulatory era has, I think, people a bit cautious. Cautious about the economy, cautious about government intervention. And that, I think, is a drag on deal flow.
Mm-hmm. Before, when you said there was a difference between what the buyer wants and what the seller wants, how much of a gap are we talking about?
Well, it depends on the industry
right.
and on the transaction, but the reason deals don't get done, in order for deals to get done, you have to have willing buyers, you have to have willing sellers. Mm-hmm. To have willing sellers, you have to have people willing to sell things at prices they're prepared to take. Right, and if you think about it, think about it in terms of homes. Mm-hmm. When home values went down by 25 or 30%, right? Homes didn't get sold for a long time because people said, "I'm not going to take a loss on my house. Yes. I'm going to hold my house, and I'll hold it for as long as it takes until values come up." Mm-hmm. Well, values haven't come all the way back up in many parts of the world, or the United States, but people are beginning to sell houses because people want to pay a little more. People are willing to take a little less than maybe they wanted to take, and those transactions are starting to get done again. Mm-hmm. Same thing is true in across broader industries, which is as the price that people are willing to sell comes down a little bit or becomes more realistic based on understanding what's out there in the marketplace, and buyers are more confident, more comfortable about doing deals. Mm-hmm. And that has a lot to do with looking forward at the economy, with looking forward at consumer demand, with looking forward at what's happening in the regulatory environment, and trying to understand how that all interplays into what they're trying to do. Mm-hmm. As they get more confidence, people are ready to go do deals. There's, one of the largest assets on corporate America's balance sheet these days is cash.
Mm-hmm. A lot sitting on the sideline waiting to do something.
In that kind of environment, as things begin to get stronger, you would expect the deals to continue to increase.
Well, most of the economic data out of, say, Q4 2013 has been strong. So we know we're on a recovery path. The problem is how fast? Yeah. How quickly are we recovering?
I think I would say the data has been improving. I don't know that I would call it all strong. Certainly the data is improving. The Fed's meeting this week in Washington. It's December as we're doing this interview. Decisions will be made about eliminating the QE2 program, or at least QE3 or at least tapering and beginning to get back. But as we sit here today, we are still in an environment where money costs virtually nothing. And that has broad implications. We're still, in my view, abnormal times. We need to get back to a more normalized interest rate environment over some period of time. Mm-hmm. I still think it's probably 2 or 3 years out before that happens. And that will because it's not just what money costs you; it's also what you can get on the return for investing money, right? And so lots of consumers are finding that their 401ks and their retirement plans aren't yielding what they want them to because they're not getting the kind of returns they'd like to get. Mm-hmm. So, we do have a fully integrated economy, and it all sort of plays together as we move forward.
Mm-hmm. Right now, say 10-year Treasury, I think it's 2.8% right now. Where do you see that going?
I'm not a real good numbers guy to sort of predict exactly where it's going to go. I mean, I think ultimately, I think you need to see interest rates normalize, by over time. By going up 400 to 500 basis points from where they are now, and maybe a little more than that even. And so
that's what you would call a normal.
I think that's what economists would call a normalized period. I mean, I think having the Fed funds rate at essentially zero is not normal. That's not normal. And I don't think the Fed's indicated they're not in any hurry to sort of move rates north. And so what you continue to have in the world, in the restructuring world and in the distressed world, is you continue to have amends and extends and moving debt walls out into the future, into 2017 and 18 and 19. There's a lot of retailers this Christmas who aren't having a very Merry Christmas, but very few of them are in danger of imminent collapse because they have cash reserves, and interest rates are so low and there's so much liquidity out there. That the ones who are really in trouble are more likely to do rescue financings than they are to restructure in any kind of dramatic way in the first quarter. There are always exceptions to the rule, but that's part of what we see.
So I want to actually, being a leading, legal practitioner, what is the most important legal issue you think the deals are facing nowadays?
I don't know if there's any one most important legal issue. I do think that the increasing, we've moved from an era of deregulation, right, starting back in the 1980s, where the pendulum was swinging back from, we were regulated and then deregulated. Now it looks, the pendulum is definitely swinging back towards more regulation across industries. And that regulation doesn't always make sense. There's always the concern, is the pendulum moving too far now back to the regulation side? And it's requiring people to sort of, take that into account in deal making. So I would say regulatory issues are really very high on the agenda. I think in cross-border situations, trying to understand cross-border economies, trying to understand the risks to capital investment, trying to understand when you have a global business, trying to understand all the places they operate and how capital moves in and out of those jurisdictions, all those kinds of things.
In terms of regulation, do you think the people who are making these regulations know about M&A space, or they're just making them?
I can't get into the heads of the regulators, but I mean, I will tell you my experience from many I've dealt with. There's a lot of people in Washington who are very sophisticated, intelligent, act in good faith, are trying to develop social policy and government policy they think makes sense, and believe, and only point back at the last 20 to 25 years at examples where they say, had there been regulation, we wouldn't have had this crisis or that crisis or another crisis. And that's intended to prove their point. I don't necessarily accept all of that. I don't believe that we can be a regulation-free economy. I also think there is a lot of danger in over-regulating the economy.
And you feel right now we're in an over-regulating economy?
I think the pendulum is swinging in that direction, yes.
So you think it's going to get worse?
I think it will get worse before we find the balance. I think we need to find a balance that makes sense, and that we need, and people are going to have to sort that through. That's both that's a political process as much as anything else. I don't think much is going to change between now and 2016, and depending upon how people feel about the regulatory environment, how business fares in the next 3 years, how Americans feel about their own lots in life, and how they're being treated will have a lot to do with what happens.
So you think between now and 2016, even though you think there is probably going to be more regulation, you're still very optimistic about the M&A space because the economy is recovering, transactions are picking up?
I think I said I was optimistic.
Okay.
You added the very.
Yeah, okay.
I think I said I'm optimistic. I think we're moving in a direction of continuing strengthening the economy. I think there's pent-up demand, and I think there are governors or regulators on that demand still of people being concerned about some of the issues I've identified, which is why we're not flat out. But I continue to see the accelerator pedal being pressed, maybe more gingerly than you would expect as people move forward. But I would expect 2014 to be a better deal year than 2013.
Okay. What can the lawmakers do to make it easier?
Well, depending on the industry, there are folks who would say get rid of Dodd-Frank, right, which isn't going to happen politically. I mean, I go down and talk about other regulations. You get this regulation or that regulation. I just don't think that's the. I don't have my Christmas card list of things that ought to get done tomorrow because I don't think it's realistic. I don't think you're going to see regulation abatement in the next several years.
Do you think the midterm election is going to change anything?
No, not really.
Okay.
It traditionally doesn't have much of an impact when it comes. It may, depending upon what happens, slow down additional regulations.
Sure.
But I don't think you're going to see much in the way of regulations being abated that have just been put on the books.
Okay. In terms of cross-border transactions, which you talked about earlier, any insight you want to share with our viewers?
So many businesses are involved in, have cross-border deals and are involved in activity across borders. It has a lot to do with the economic channels they're trying to sell products through. It has to do with where they're tapping on labor forces around the world. It has to do with markets they're trying to penetrate to drive profits. There are, and so I think it's very hard to look at businesses above, sort of a modest scale and not be thinking about what the cross-border play might be. So I think people are, we're in a global world, and businesses cross borders regularly, and how they transact business. And I think most of us who represent business understand that and are prepared for it.
All right. Thank you so much. Anything else you want to add?
No, thanks a lot.
Thank you very much.
You're quite welcome.